everyone for having here. Good day. So stay tuned for a few while. So we are waiting for our guest. Like hope that within few minutes he will join soon. So people like stay tuned and also wait for a few minutes.
Hello. Hi, Emma. Can you
Yeah,
hear me?
hello Mark. Yeah, I can hear you. How are you today?
I am good. How are you?
Yeah, I'm good also. Just waiting for you actually to start this evening.
Okay, just can you give me just 1 second, please?
Yeah, sure, no problem.
Okay, I think I'm ready to go.
Okay, yeah. Thank you for having here first of all. And also people, thank you for joining to this AMA and people stay tuned and learn more about the GoMining. Today we'll discuss more about this project actually. So I would like to thanks Mark for having here. So first of all, Mark, could you please introduce yourself a little bit, like your background, and also how did you first, I can say, come to into the contact in the Web3, and also what attracted you actually to this area? Could you say more about that?
Sure, sure. So, first off, hi everyone. Hello. Thank you for joining us this afternoon. Very happy to be here with you and to talk about our project and our project team and the changes that we're doing. So, with a little bit about my background, I've been working at the intersection of financial technology and IT for over 20 years. I've worked in traditional banking, consumer lending. I worked leading large technology organizations in banking as well as in industrials. Spent a large part of my career working for GE in various businesses in various countries. So I've always technology has been a big part of my professional life ever since I started working for a living back in 1997. I actually grew up in Silicon Valley, so I'm very familiar with the entrepreneurial and sort of startup culture, and that's where my career actually started. So, um, been around technology for my entire basically professional life. Um, I'm actually a latecomer, I guess, into the crypto and the Bitcoin community because I was very skeptical at the beginning. I guess my first brush with Bitcoin was back in 2000 sorry 2013, and at that time I sort of couldn't figure out what this thing was and what sort of future it held, and I kind of brushed it off. And you know a couple of years later had another sort of opportunity to join the cause, and I passed on that because I still wasn't convinced. And then back in I guess 2020 20 yeah 2019 2020, I started taking the whole space more seriously, and I guess I was convinced uh, of the staying power and the utility of what the crypto and blockchain world was about, and specifically how Bitcoin was developing, and how more and more people were sort of coming on board and joining the community. So I joined the Go Mining team back in I guess 2021. Um, the team actually started the Go Mining journey a couple of years earlier, and then in 21 we met through a mutual acquaintance. Basically, we were introduced, and this person that I've worked with professionally for 15 years prior to that said, you guys should meet and have a conversation, and it's probably going to be worthwhile for everyone involved. So that's what we did, and I've been part of the Go Mining journey ever since. Um, and I guess um, talking about Web3 and DeFi and so on. I guess what attracted, I wouldn't say attracted, but why it felt such a natural fit for me is because As I mentioned, fintech is basically my background, and the whole DeFi movement and the whole sort of uh, community around it and the ethos of what people are trying to build is basically next generation financial services, which is what I've been doing for my entire professional life. So it felt a very natural fit. I think I have a lot of background in terms of traditional financial services, and I've built IT systems, technology systems that automate existing financial services before. And so it's just a natural transition for me to start looking into that direction and into how how the crypto community, how the blockchain enabled technologies can sort of lead the next generation of financial services, and definitely untie it from the big traditional banking world that essentially controls it today. And there's good and bad, obviously, with that. But I think uncoupling it from traditional banking and making financial services available in a more egalitarian or more technologically driven way, I think is definitely something that A, has a huge future in terms of business opportunity, and B, has, I think, a significant contribution to make to the society, to our society as in general, because that's the natural order of things. It's when services get developed, they get developed by these large business institutions, and then every so often technology capabilities come along and they sort of break down barriers. And I think that's, to a large extent, that's what's happening today. I think as DeFi gets more and more developed, and business models and project teams and financial services products get developed, I think that's what's going to happen, is the big banking institutions are going to no longer be able to be sort of gatekeepers to a lot of financial opportunities. Whether or not somebody can take out a loan is not going to depend on a particular banking institution sort of underwriting you and saying, yeah, I like you, I think you're trustworthy, I'll give you an opportunity to take a loan. That is going to take advantage of existing technologies, and as we see with a number of projects in DeFi, become untied from traditional banking and start to function in different ways. So that's sort of my view on Web3 and DeFi, and why it's very exciting for me to be part of that space, and why I think honestly I think I can make a significant contribution to that.
Okay, Mark. Thank you. Happy to know about your versatile experience, and also happy to join in the GoMining actually. So Mark, I heard about this month has been quite fruitful for your GoMining. Could you tell us more about that? Like, what do you think about that actually?
Yeah, great question, thank you. So let me take maybe just half a step back and talk about the GoMining sort of journey and evolution, and because that's important to understand the changes that we've made this year. So basically, what GoMining, the reason GoMining came into existence is, traditionally the team is one of the biggest mining services providers in the world, and so we're experts in mining Bitcoin, and that's what sort of brought everybody together initially, and that's the capability and the expertise that we've been developing and running operationally for more than 5 years at this point. And how the GoMining project specifically and the GoMining token came into existence is, at some point a couple of years into this journey, we were basically talking, and we recognized that if you are if you're somebody that believes in Bitcoin and believes in Bitcoin is probably the wrong way to phrase it, but believes that Bitcoin has a future, and that future is uh, the price of Bitcoin will appreciate because the utility keeps increasing from year over year, and as Bitcoin adoption becomes more prevalent, the price of Bitcoin is going to rise. So, if you are a person that subscribes to that point of view, you basically have two options to participate in that in that asset growth. You can either buy Bitcoin and hold it, or you can invest in mining Bitcoin. And mining Bitcoin is the core part of Bitcoin of the entire Bitcoin ecosystem, because that is the process that provides the infrastructure that supports, enables, and makes Bitcoin possible. So if you're somebody that believes in Bitcoin and its future, you have those two options. Well, mining Bitcoin is a very complicated process. It's a very complicated process from a technical perspective. No, not so much, but it's more complicated than setting up your iPhone or whatnot. And and secondly, it's very complicated from an operational perspective and a financial perspective, because mining Bitcoin requires a lot of capital. You have to buy specialized expensive hardware. You have to be able to house that specialized expensive hardware in specialized data centers that have to be built and maintained and managed, and all of that takes a significant amount of money. So it's a very capital intensive business, and because of that, because of those requirements, Bitcoin mining wasn't really something that was accessible or is accessible to an average person that doesn't make doesn't make Bitcoin mining a core part of what they do on a day-to-day basis. So once we had that realization, and it wasn't like an epiphany moment, that somehow dawned on at some point on someone. It was a series of sort of multiple conversations between multiple team members and people outside the project, and we sort of recognized that what we're doing is not necessarily accessible to most people. And the next question, obviously, that we had, okay, well, is there a way that we can make it so? Is there a way that we can make Bitcoin mining available to an average person? And we sort of evolved that to say, okay, well, can we take what we do and package it in some way so that an average person that has the same long-term view on the viability of Bitcoin can basically come in and buy a product packaged in a particular way, an easy way to own and maintain, that can basically take advantage of mining Bitcoin, as opposed to basically buying Bitcoin and holding it. Because from our perspective, having been in the mining game for a long time, we actually know that the ROI, the return on investment that you get from investing in the mining infrastructure, is significantly more advantageous than the buy and hold strategy. So basically, you get a bigger bang for your buck. And so we said, okay, well, we think there's a future there. Let's try to build a product that is easily accessible and easily available to an average person. So, and that's how the GoMining token was created, or was conceived and then created, is as a means of doing that. So we said, okay, well, let's take the infrastructure that we have, let's see if we can tokenize that, and basically sell a part of our mining capability, tokenized by a token, and that would allow somebody to, instead of investing $1 million, be able to invest basically, the cost of the minimum buy of the token and participate in the mining process that way. So that was the original idea, and that's how GoMining started. And we followed the typical life cycle, the typical path of a technology startup. We had an idea. We weren't sure if that idea would actually be meaningful or would bring value to a lot of people. So we prototyped it and we put it out on the market, and we saw that a lot of people were interested. There was a lot of demand. There was a lot of conversations back and forth, and that was basically the version 1 of GoMining. And as we gained traction in the marketplace, as people found out about our project, as they looked, dug deeper, and we started having feedback in terms of, okay, well, the idea makes sense, but what could we do to what could we do to improve it? What other features should there be around this product that would make it more valuable, easier to understand, easier to hold, etc. for the user community? And we've basically been having those conversations for ever since the GoMining token was first created in 2021, and a year and a half ago, we started to convalesce around the idea of what version 2 should look like. And a lot of long conversations, a lot of brainstorming sessions basically ended up bringing us to where we are now, which is version 2 of the product, which maintains the original idea of let's make Bitcoin mining available to people, but adds significant, what we think of as improvements on top of that original idea to make it more tangible and more sort of value creating for version 2. And so why we say that the previous month has been very exciting for us is because we've actually just released about 2 weeks ago the version 2 of our token and of our protocol. So I'm very happy to talk about what we're doing there. So we took the original idea, and it was basically you buy the token. The token every 24 hours. The token represents Bitcoin mining hash power. Basically, the processing power that's required to mine Bitcoin, which obviously, as you mine Bitcoin, every 10 minutes, a new block gets created and a reward gets awarded to the miner that creates it. So owning Bitcoin hash power means that on a regular basis, you're getting Bitcoin mining rewards, and that's what provides the return on investment. So the calculation of how much mining rewards you get depends on the mining hash power. So the more hash power you have, the more rewards you get. And that was the original idea behind the version 1 of GoMining, is you can purchase hash power as represented by GoMining tokens, and every 24 hours you get the commensurate Bitcoin rewards commensurate with the mining hash power that you have. So the more you have, the more you get. The less you have, the less you get. And it was very the idea that the problem we were solving for is ease of use. So we wanted to make it as easy as possible to sort of dip your toe in the water, and that's why it's very easy to buy GoMining tokens across a variety of exchanges, and then it's very easy to sell them as well. So you buy the token, and the next morning, the 24-hour clock starts. You get the mining rewards, and then you sell the token, and you stop receiving rewards. It's extremely easy. And that was a core sort of issue that we wanted to address, and I think we addressed it very successfully. And we became a little bit a victim of our own success here, because on the back end of all of that, the mining infrastructure is actually very capital intensive and very time consuming. So for us to build up the infrastructure that is then becomes represented at a later point by that token, it takes millions of dollars of investment and takes over 9 to 12 months of planning and operational execution to build data centers, to procure equipment, to install and set up and manage that equipment. We have people managing the infrastructure 24/7, making sure that the hardware runs efficiently, making sure that we spend a lot of time on cybersecurity, for instance. So we have a separate team monitoring the security of our network, responding to threats, etc., etc. So it's a very long-term and capital-intensive operation. And as we made this token very easy to sort of buy and to sell, that ease of use started to create problems for us, because on the back end, again, the infrastructure is very long cycle, so we need to have sort of capital coming in that we can be certain is going to stick around for 6 to 12 to 18 months, whatever, as we build new projects to create additional capacity. But yet the token is so easy to move in and out of. It was mismatching the way that we needed to run the project. So that was one of the things that we wanted to address with version 2, is basically say, okay, now that we've made it easy for people to join us, we actually want people that want to stick around with our project for the longer term to be part of our journey. So how can we incentivize this long-term participation, and how can we make it sort of clear that that's the type of partnership that we're looking for, and how can we make it worth everybody's while to sort of go along with us on this journey. So that was one of the fundamental changes that we wanted to make. And the second fundamental change is along the same lines of, basically we're saying, well, we're trying to build an ecosystem, right? And one of the feedbacks that we got is basically, look, what you guys are doing is very interesting. Is there a way for other companies to be able to join you in sort of tokenizing their hash power, so that it's not necessarily the GoMining team, but other people can come on board? And we've come up with this idea of liquid Bitcoin hash that essentially allows anyone with the mining infrastructure to join with us and tokenize their hash power and make that available to token holders as well. And so increase the supply of infrastructure, increase the supply of tokens, and basically, as people that own the tokens are earning rewards along with the infrastructure providers. So we're expanding the original idea. We are, with the changes that we're making it possible for other infrastructure providers to join with us, to join with our project. We're making it more interesting, financially incentivized for people to become long-term holders, of long-term stakeholders within our ecosystem. And that's what we're doing with the changes to the token. So the way the token is the way the infrastructure works now is, as you buy a token, that token, let me take a step back. So the way to participate in mining rewards is basically the Go mining token is the entryway into the ecosystem. So you purchase a Go mining token, and that allows you to start playing within, participating within the ecosystem. In order to, we use NFTs to represent hash power today. So to basically take advantage of the mining opportunity and the ability to earn mining rewards, you purchase an NFT, and it essentially represents a digital equivalent of mining hash power. That NFT is tied to a particular piece of tangible physical hardware sitting in a data center. And as that tangible piece of hardware earns rewards for you, those rewards, you earn those rewards as the NFT holder. You're basically owning the digital representation of that infrastructure. Now, as that infrastructure runs on a day-to-day basis, it consumes electricity. So that electricity payment needs to make its way from you as the owner to the service provider that is providing you the physical sort of representation of your NFT. And they have, electricity providers that supply electricity on a day-to-day basis. They need to make those utility payments, and those payments, need to make their way from you to them. So we use the Go mining tokens to enable those utility payments. And one of the ways that we thought would make sense to incentivize a long-term sort of viability of the ecosystem and creating value within the ecosystem is, as the tokens are used for payment, we use what's called the burn and mint algorithm to take the tokens that get sent to service providers to provide the payment for the electricity. We burn those tokens, and then we mint new tokens using an algorithm that basically right now is 80% of the burn. So we mint 80% of the burn of the tokens that we burn. And then as that decreases the supply of tokens. And there's a white paper out on our website that talks about the plan to how we plan to manage that burn and mint algorithm, and how that ratio will shift over time to come closer to 1-to-1. But right now it's at 80%, and then we distribute the 80% along the ecosystem participants. So the bigger part of that makes its way to the service providers as payment for electricity. We also send part of that as rewards to long-term token holders that have staked their tokens, and this is going back to the long-term incentives that I talked about, of people becoming part of our project. So as you buy tokens, you're basically able to stake them with us. And based on the length of the staking period and the amount of tokens, you get assigned what we call voting escrow tokens within our ecosystem. So based on the voting escrow tokens, two things happen. A, you get rewarded as part of this burn and mint cycle. So we don't send 100% of the new minted tokens to the service provider. We send about 65%. The other 35% get distributed as A, rewards for long-term token holders, B, rewards for NFT owners, and C, 5% goes to the project team that is actually running the project. So in that way, we're actually trying to balance various stakeholders' interests across the ecosystem and create value in the ecosystem itself. Obviously, a lot of this sounds familiar. We're constantly looking at what all of the other teams, or most of the other teams in the Web3 space are doing. Obviously, the burn and mint algorithm wasn't invented by us. We're looking at very much at what the Ethereum team is doing. We're looking at what all of the other teams are doing, and trying to pick up and on the best practices that we think will be applicable and will add value to our project. So that's sort of I, I don't want to say in a nutshell because I just spent 20 minutes talking about it, but that's an overview of the changes that we've basically made for GoMining version 2.0. I recognize that there's probably a lot of questions out there, so I'll look for specific questions that people may have and deeper dives that people may want to go into once we get to the Q&A session. But let me stop here with this answer. It's been a long one.
Yeah, no problem. Like we are here to like make more explanation about that. So before going to live, like what do you say? What is your future plan actually? Like, what do you think about in the last of 2023 and also in the beginning of 2024?
Say that again. I'm sorry. It was breaking up a little bit for me, so I'm not sure I got it.
Okay, yeah, like I said, could you say about your future development plan actually? Like, what is your plan in the last part of the 2023 and also in the beginning of 2024?
Um, I've honestly right now we're looking to shake out the version 2 changes that we've just enabled and just rolled out. So we recognize that from going from version 1 to version 2, it basically took us 2 years. As we've had, and as I mentioned, we've had a lot of feedback and a lot of brainstorming in terms of how to develop our protocol. So we've basically at some point we had to stop taking ideas in and say we've got 3 or 4 major changes that we want to make. Let's make those changes to the protocol. Let's technically enable it. Let's roll it out. And now we're basically in the feedback gathering stage. So we've rolled it out a couple of weeks ago. Q3, Q4 this year, we will basically be looking to see whether our assumptions will prove to be correct. So as we mentioned, we are incentivizing long-term token holders. We're actually also part of the rewards that the staking token holders will have is we will give governance ability to based again on those voting escrow tokens that I talked about. Not only will voting escrow tokens be receiving rewards, but they will also receive governance rights within the protocol, and that is something that will be a brand new part. Sorry, can you hear me okay? Yeah,
Yes, I
sorry.
can. Go
Yeah,
ahead.
that is something that will be a new part of the way our project functions. We will have periodic governance polls and voting input in terms of how the distribution of tokens within the burn as part of the burn and mint cycle, how part of the newly minted tokens will get distributed within the protocol. And we're very anxious to see, what sort of traction that process will generate within the user community, how those types of processes will work themselves out. So we've made the change from in terms of governing the project based on certain assumptions, based on the fact that there will be value for token holders in having a more direct participation. There will be value for token holders in terms of longer term staking of their protocols. So we're looking to see over the next 6 months whether our assumptions are correct, whether that drives the participation in the project that we expect it to drive, and whether that delivers the end results that we wanted to deliver, and start again the feedback cycle to come up with ideas for version 3. So I think that's this. I realize that most often the answer to the question you asked me is we've got a development roadmap for the next 3 years, and it includes so and so. But I guess what experience has taught us is as with any startup, or with any new product coming out to the market, there's no way to predict how the market will react to the new product features that you put out. So once that takes place, you really need to go into sort of a listening phase and be very focused and conscious in terms of what the market, what the user community will be telling you about the product that you've just created, and then take that feedback and use that to drive your product development strategy. So that's the way we're thinking about it. Obviously, we have ideas about where we want to go, but we also recognize that we've made a major change and a major pivot, I should say. And we need to take our time and be deliberate about how we take on board and process the feedback from the user community. So hope.
Okay, yeah. Thank you. Yeah, thank you, sir, for answering this. Actually, like I saw, like people are waiting to ask you questions, so I think I can choose someone to ask question. So wait a
Sure. You'll be selecting questions, correct?
yeah, like randomly, I saw a lot of people raise their hands. So first of all, I can see here is Sam. Hello, Sam. Are you there?
Hello, am I audible?
Yeah, you are. Ask your question,
Hi,
please.
Sam.
Thank you. So, how does Go mining network address the issues of scalability in blockchain network, and what measures are in the place to ensure fast and efficient transaction processing? Thank you.
Say the first part of your question again, please.
Yeah, the first part of it is about issues of scalability in blockchain network.
Scalability
In Go mining network,
I'm sorry, I'm having a hard time.
Sam, could you please refresh your question from the beginning to the end, please?
oh yeah, thank you. So, how does Go mining network address the issues of scalability in the blockchain networks, and what measures are in the place to ensure fast and efficient transaction processing?
So, I mean, for us, we don't really have scalability issues per se. Obviously, we have we're using the Ethereum and Binance blockchains, but the major sort of transactions that happen for us is basically rewards going out once every 24 hours, and that's a big transaction that goes on onto the blockchain. But for us, we're not processing transactions on a by second or by minute basis per se. So that I'm not sure that I got your questions. I got the gist of your question because I was having a hard time for whatever reason hearing it completely. But in terms of scalability, I don't know. We don't have issues that we're wrestling with in terms of the number of transactions that we're putting through the blockchain.
Okay, sir, I got it, sir. So, one more question. So, how does Go mining ensure the security of its platform and prevent unauthorized access or tampering with the blockchain? Thank you.
Right. It's a very good question, and one that we sort of work on a day-to-day basis. So I touched on this briefly, but obviously we have a large amount of value represented by tokens and represented by obviously Bitcoin moving through our ecosystem. And information security is something that is core to everything that we do on a daily basis. There isn't one answer to the question that you've asked, because security is not really about having a particular application or a particular approach or a particular silver bullet response to solving the issue, right? You can't say, well, we're running, Microsoft, this Microsoft service or that Cisco service, or we have a checkpoint firewall deployed or whatever is the latest fad. To say to respond to a question about information security, because information security is about layers of security management. It's about access control. It's about managing user rights. It's about network control. It's about all sorts of things, and not all sorts of things, but multiple, dozens and hundreds of technology tools and standard operating processes and periodic audits, etc., that all combine to create a information security resistant environment to address the information security risks that exist out there today. So obviously, I'm hesitant to go into any level of detail about what we do and how we do it, but I do want to say that it's been core. Virtually the first meeting the around GoMining was basically most of the time talking about how do we make it secure, how do we make sure that bad actors don't come in and basically take advantage of all of the good things that we've done and use that for nefarious ends. So it is something that I personally have a lot of background in, because I mentioned that I spent a large part of my professional life in commercial banking, where retail banking, where that obviously information security is a huge part of what we do. I started my career in 97, 98 actually working on information security. So it's been part of what I do and part of what we do as a team on a daily basis for as long as we've been doing this. And we recognize that it's not something that is ever a completed process. So you can never say I'm 100% secure, because tomorrow something new will appear, and you have to be constantly vigilant and constantly cognizant of new threats and new attack vectors. But we apply a lot of resources, and we're successful, and we have been successful, and we definitely plan on continue to be successful in managing it.
Yeah. Thank you, sir. Keep up the good work, sir.
Thank you.
Keep building.
Yeah, thank you, Sam, for your question. And next one is Groot. Hello, Groot.
Hello, can you hear me?
Yeah, ask your question, please.
Thanks for bringing me out to speak in this AMA. It has been an informative AMA so far. My question is, trust is very important in any businesses. Can you tell us about what makes investors, customers, and users feel safe when working with a project? Thank you.
What makes investors and users what? I'm sorry.
Fee space. I mean that trust is very important in any business. Can you tell us what makes investors, customers, and users feel safe when working with your project? Thank you.
Feel safe. Great question. So, I guess there's a number of ways to address it, and again, we recognize that trust and transparency is core to what we do. There's a number of ways that we have come up with that addresses that concern, and obviously we're always looking for additional ideas. So if anybody has suggestions for us, feedback for us for how we can, address that issue, feeling safe, feeling trustworthy, feeling clearly transparent about how we do things, why we do things, how we manage it, please, feel free, or we actually actively request that you get in touch with us, and we're happy to discuss suggestions. But so what we do now is we basically, all of our infrastructure is run on public smart contracts. So the burn and mint algorithm, the rewards calculations, etc., those are all public, and that is something that it takes a little bit of effort. We recognize that, but I think what's important for us here is we're taking advantage of the transparency of the blockchain sort of technology to make all of that easily accessible and transparent to anybody on the outside that wants to take a peek into what we're doing. So it's very transparent to take a look at the way that the smart contracts function, to see how we calculate all of the transactions that go on, to understand what's, how the funds are coming in, how the funds are going out. We also use, I just talked a little bit about the information security approach that we do. We also use external parties to audit constantly the smart contracts, the architecture, the coding language, etc. And what we do, and we make those reports available also. So if you go on our website, you'll see sort of CertTech audit reports that we've brought them in to review as an external sort of expert, to review what we do and how we do it. And I guess the best sort of maybe not the best, but I think that the most straightforward way to take a look at how we actually pay out rewards and how much we pay out, and the rewards, I mean token mining rewards, yes, not token, Bitcoin mining rewards, is every day that transaction goes out, on the Bitcoin blockchain, and it's completely transparent, and you can see the number of rewards that gets sent, and the addresses that they go to. And if you come on board and join our project, then you'll start to receive that transaction as well, and you'll be able to see it. So those are just some of the ways that we have come up with to address the question that you asked. But again, we understand that it's a journey, and it's not a destination. You're never sort of able to put a check mark in a checkbox and say, we've answered the question of how can our users feel safe. It's a constant process, and we spend a fair bit of resources to figure out how we can address that. And obviously, as time goes by, we constantly look for additional things that we can do. And again, if you have a suggestion, if you have an idea about what you would like to see us do in order to address that, please feel, I don't want to say feel free. We actively ask you to come and talk to us, because this is, again, something we're looking to address on a daily basis. So I hope that answers your question.
Yes, I'm okay with your answers. Thank you, sir. Keep going on the job.
Thank you.
Yeah, thank you for your question. Next one is Jack. Hello, Jack.
Hello, can you hear me?
Yeah.
Also, my question for GoMining app, I just want to know, what does GoMining app has planned on integrating NFT into its platform?
Yeah. So the NFTs that I think we have 3 collections now. The NFTs, the way that we use the NFTs is, as I mentioned a little bit back, is to represent the physical mining infrastructure, and obviously we recognize that that is a very unique way that our specific team have come up with using NFTs, and we also want to put our sort of art foot forward in terms of designing the digital art that goes onto it. But the basic function is to represent the mining infrastructure. So as I mentioned, they're rated based off of physical mining equipment that is used. We replicate digitally the efficacy of the way that they function in terms of converting their power load converted into the Bitcoining in their electricity converted into hash power. I'm sort of coming up on my limit of talking here nonstop, so sorry for that. But we basically, as I mentioned, we use NFTs to represent the physical equipment that we have, and to store all of the relevant values, and to calculate the mining rewards based on the efficiency and the throughput of our mining equipment. So that's a novel way of using NFTs. We don't just rely on them as crypto art. Obviously, we want to make them look nice as well, but we use them as an essential part of our ecosystem to represent the digital sort of tokenized equivalent of Bitcoin hash power.
Okay, thank you, Jack, for your question. Hope that you got your answer. Next one, I can go for Believe. Hello, Believe.
Hey, my question is, as the Mark said that we can mine Bitcoin just by holding their NFTs. So does I have to upgrade or repair these NFTs time to time to continue mining efficient way?
So the reason, not the reason, but the idea behind using NFTs to build it is we're basically replicating the way that Bitcoin mining works physically in the physical world. So so to answer your question, yes and no. You can buy the NFT and hold it, and that will provide rewards for you. But because the NFTs are built to represent the way the process works in the real world, it's a bit more complicated than that, because your hash power, the hash power of the network, of the Bitcoin network, continues to grow all the time, and it becomes it's called the difficulty in the network, and I'm sure most people are familiar with the concept. Otherwise, you probably won't be won't be part of this conversation. But for people that aren't familiar, as the Bitcoin mining algorithm is self-correcting. So as more people, as the computing power of the Bitcoin mining network works, as the computing power of the Bitcoin mining network increases, what's called the difficulty of the network also increases. And what that does is it prevents basically somebody from putting a lot of computing power in the network and capturing a disproportionately large share of rewards. So the more computers join in the Bitcoin network, the more complicated it is to earn the rewards on the Bitcoin network. So what that means in practice is, if you buy a Bitcoin machine, a Bitcoin mining machine, for instance, today, and the difficulty of the network grows over the next 3 to 6 months, your ability to earn rewards will decrease unless you continually increase the processing power of your machine. So to answer your question, completely, you can buy the NFT, and let's say it gives you, X hash power today. As the difficulty of the network increases over the next 6 months, it's likely that, if X hash power today produces Y number of rewards on a monthly basis, that 6 months from now, it won't produce Y number of rewards, but it'll produce probably 80% of the Y number of rewards, or 90% or 70%, whatever it is, whatever that relationship is. So what we've done is we've actually made it possible that, just like in the real world, you can upgrade your NFT. Reflective of what we do with physical machines. So you can use for instance, the GoMining tokens to increase the hash power of your NFT, in addition to making it more energy efficient, in addition to other options that are available for you. So I'm sorry that it's not a straight yes or no answer, but I wanted it to be more comprehensive, because a yes or no would not really give you the most complete picture. But in a nutshell, you can keep it as it is, and not invest any additional sort of capabilities into it. It will continue to produce rewards for you, but those rewards will start to taper off and be less as the difficulty of the Bitcoin network increases. Or you can continue to upgrade the NFT and sort of maintain and maybe even increase the number of rewards that the NFT miner produces for you. So I hope that was
Yeah. Thank you.
complete.
Got it.
Okay, yeah. Thank you, Billy. I have one more last. The bullish app. Hello, bullish app.
Hello.
Hi.
Yeah, hi.
Okay.
Ask your
My
question.
question is, how does Go Mining maintain regulatory compliance in the financial technology sector?
How does GoMining maintain what? I'm sorry?
How does Go Mining maintain regulatory compliance
Regulatory
in the financial
compliance. Okay.
technology sector?
Yes. It's you guys don't ask easy questions. So again, this is probably going to be like a 3 or 4 minute answer. I'm cognizant of time, so I'll try to keep it brief. But again, this is not something that I can provide a one sentence answer to, because it's a very complex question that doesn't have one sentence answers. Well, I should preface this by saying that, again, going back to the first sort of topic about my background, I having worked in banking and especially being part of a management team of a commercial bank in 2008, or after the 2008 crisis, when a significant part of banking regulation just suddenly materialized overnight. I have a lot of firsthand experience and a lot of appreciation for regulatory oversight and regulatory compliance, and the importance of getting this right in terms of running the business. So I think this is actually one of the major topics of conversation that we had when we initially met with the GoMining team, and we're discussing my coming on board. Of this is part of the value that we felt I could bring into the project, is because I've gone through the regulatory compliance sort of baptism by fire in my banking roles previously. So there is no easy answer in terms of regulatory compliance, because a lot of what we do just doesn't have a particular government regulation. So in banking, oftentimes it's easy. You have a banking regulator in every country, and that could be the central bank, that could be a separate regulator, it could be called whatever. But people have been doing banking for hundreds of years, and banking regulations have been around just as long, and probably a little bit shorter. But definitely since the first banking crisis that materialized. So it's fairly easy to understand what government regulators expect you to do and don't expect and don't want you to do in that area. For us, it's more difficult because Bitcoin and Bitcoin mining and crypto and Web3 and DeFi have been around for years, not decades and not centuries, and a lot of growth is happening very quickly. A lot of changes are happening very quickly, and because government regulators are, first of all, by design, meant to be very slow and deliberate in terms of the oversight processes they introduce, and B, because there isn't a particular regulator that thinks it's their role to regulate cryptocurrencies or to regulate Bitcoin mining. There isn't somebody focused on it, and what happens is often we get into conversations where different government regulators have oversight over different types of the way that our businesses run. So, for instance, electricity providers are regulated by electricity management commissions in different parts of the world. And because we are a major consumer of electricity, we get involved with that. Banking regulators sometimes do want to play a role in terms of how cryptocurrencies go about sort of functioning, and in some countries that is the regulator takes a active role, and in some countries a less active role, and basically say, we don't know what that is, we don't have a mandate to do it, you guys go do whatever it is that you do, but don't break any laws. And when you go and say, well, can we have a little bit more guidance? They basically say, no, all of the laws are public, so read them yourself and don't break any. And if you do, then we'll come and talk to you. And obviously, that makes it challenging. But it's the way we look at it is twofold. It's the cost of doing business. It's the cost of being innovative, and it's the cost of being on the cutting edge of something that we enjoy doing. So yes, it would be easier if we had very transparent rules that we can just put in front of ourselves and follow those and be completely clear in terms of what's expected from us. And unfortunately, that's not the case. So the way that you operate in that environment is you basically spend a lot of time talking to regulators across multiple geographies where we operate, and basically be very proactive and be very transparent and come and knock on the door and say, hello, we're here, we're doing this type of work. We want to be very transparent. We want to be good corporate citizens. We want to work with you proactively to understand what your concerns are and understand, if there's some limitations that you don't want us doing, let us know, and we'll make sure we'll do our best not to do something that you don't think is worth doing. So again, just like with information security, just like with building and maintaining trust, this is something that is a never-ending process that we, again, spend a lot of effort and a lot of resources doing, and it actually is something that I personally end up doing quite often, and consumes a significant amount of time is those conversations and explanations and about what we do and how we do it and why we do certain things a certain way. But again, it's something that I know from firsthand experience is very important to get right. It cannot be priority. Cannot be priority other than number one. It can be 1A, 1B, 1C maybe, but it doesn't make sense to build even the most perfect business that you build if it runs the risk of being shut down for not doing something that a government regulator thinks you should be doing. Then you're not doing a good job building a business. So it's something we understand, we recognize, and we spend a lot of resources to get it right. So Emma, I'll turn it back to you. I think we're past our 1 hour mark as usual.
Yeah, no problem, Mark. Thank you for your precious time. So I think we are enough for now. Like we got our 5 winners from here. So we have to wrap up this segment. But before that, I'd like to thank everyone to participate this AMA segment, and also people if you want to know more about their like upcoming plan, and also if you want to know more their mining, you can visit and also check out their all kind of documentation actually. So thank you, Mark, for your coming, for your time to our community.
Thank you very much for hosting me and us as a team, and thank you very much for to everyone that joined us and asked very good and incisive questions. And hope talk to you soon.
Okay, yeah. Thank you, everyone. Good day.
Bye.
Bye.